IRS audits don't usually go wrong because someone was trying to cheat. They go wrong because people respond the wrong way at the wrong time for the wrong reasons. Most taxpayers think an audit is just about paperwork, receipts, forms, numbers, documents. But in reality, an IRS audit is about positioning. By the time the IRS starts asking questions, they're already testing whether your story makes sense, and how you respond early on determines whether the audit stays narrow or quietly turns into something far more expensive. In this video, I want to walk you through the most common IRS audit mistakes that I see, why they cost people thousands of dollars, and what you should be doing differently if you want to stay in control of the process instead of reacting to it. Mistake number one, treating an IRS audit like a casual conversation. One of the biggest mistakes people make is assuming the IRS auditor is just looking things over. So they start explaining. They talk too much. They answer questions that weren't actually asked. An IRS audit is not a conversation, it's a structured process, and every word you give the IRS becomes part of the record. Auditors are trained to listen for inconsistencies. If your explanation wanders, evolves, or induces new facts, you're expanding the audit yourself. The safest response is always precise, limited, and supported by documentation. Nothing more. Mistake number two, oversharing because you think cooperation equals safety. People believe that being overly cooperative with the IRS will make the audit easier, so they volunteer timelines, they give background stories, they explain motivations. That instinct is understandable, but it's dangerous. The IRS doesn't need context unless it's legally relevant. When you overshare, you give the auditor new angles to explore. Audits don't expand because the IRS is suspicious necessarily. They expand because taxpayers or their documents give them reasons to expand the audit. Mistake number three, believing missing receipts automatically means you lose. This is one of the most damaging assumptions that taxpayers make. If they don't have perfect documentation, they assume the IRS wins by default, and that's simply not true. The IRS allows reconstruction of records. In fact, reconstruction is normal. Nobody calls my office with pristine records going back years. You can rebuild expenses using bank statements, vendor histories, invoices, mileage logs, job locations, industry norms. What matters isn't perfection, it's whether the reconstruction is logical, consistent, and reasonable. The real mistake isn't missing paperwork, it's failing to present a defensible alternative. Mistake number four, accepting the first auditor's conclusions as final. Many people don't realize this, but an audit report is not a verdict. The first auditor is not the final authority. Their job is to review what's in front of them and issue a report based on that snapshot. Appeals exist for a reason. Appeals officers are more experienced, they're more focused on resolution, and they're often far more reasonable than frontline auditors. I've seen countless cases where taxpayers accepted assessments simply because they didn't know they could push back, or were too exhausted to fight. Assuming that this is just how it is one of the most expensive mistakes you can make. Mistake number five, rushing to close the audit just to make it stop. Audits are stressful. People want relief, so they agree to adjustments they don't fully understand. They sign reports they haven't reviewed carefully. They waive appeal rights just to move on. That short-term relief almost always creates long-term damage. Once an assessment is finalized, penalties and interest begin compounding and collections become the next phase. Speed helps the IRS, but deliberation protects you. Mistake number six, not understanding what the IRS is actually looking for. Most audits aren't about fraud. They're about whether your numbers make sense together. The IRS looks for patterns, income that doesn't match lifestyle, expenses that look estimated, deductions outside industry norms, losses that repeat year after year. Your tax return is a story, and if the story your return tells isn't believable, the IRS will start pulling threads. That's why disorganized books are dangerous, not because they're illegal, but because they're hard to defend. Mistake number seven, letting fear dictate strategy. Fear causes people to talk too much, agree too quickly, avoid asking questions, and give up leverage. The IRS is not offended by structure. They expect documentation. They expect clarification. They even expect a disagreement as long as it's done correctly. Freezing up doesn't help your case. Oversharing doesn't help your case. Rushing doesn't help your case. Audits are not about proving innocence, they're about whether your position is defensible, and the IRS will always take the path of least resistance. Why these mistakes feel reasonable in the moment? This is the hardest part. Most audit mistakes feel reasonable at the time. People assume the IRS already knows everything, pushing back will make it worse, and I just want this over with. But those instincts work against you. Calm beats compliance, structure beats speed, and strategy beats fear. What smart audit responses actually look like. A smart audit response focuses on limiting scope, answering only what's asked, supporting positions with documentation, reconstructing records when necessary, preserving appeal rights. It's not about being aggressive, it's about being intentional. If any of these mistakes sound familiar, don't panic, just get informed. I put together a free resource called the IRS Freeze Guide. It explains what to do if you're frozen with fear and just don't know what to do, why it happens, and how to thaw yourself out so you can take action and start to resolve your IRS problems for good. You can download it for free using the link below. One more mistake that deserves its own mention. The final mistake I see is waiting until enforcement begins before taking things seriously. Once liens, levies, or garnishments are on the table, your leverage is gone. At that point, you're not planning anymore, you're reacting. The earlier you engage, the more options you have. Waiting doesn't buy time, it costs it. IRS audits aren't fatal, but responding to them the wrong way can quietly turn a manageable situation into a very expensive one. The better move is understanding what actually triggers audits in the first place, because avoiding them is always easier than fixing them after the fact. That's why you should watch my next video where I break down the top IRS audit triggers and what puts returns on the IRS enforcement radar. See you there.